You're back on Starting Gate. All right, last 2 weeks to go before the year ends. Year to date, the PSE index has erased all gains. Now, to look forward to 2017, our special guests Marvin Germo and Ricky So join us again. Let's begin with Ricky and JP down in the newsroom with the terminal. What is it looking like today, guys?
Well, I decided to pull out a couple of charts for Ricky So based on what he wanted to look at, Reg. And really, we're looking at certain moving averages just to see how far the PSE might actually fall before the year end, and really the upside or downside depending on how you look at it for the next year. Ricky, thanks for joining us again. Yeah. This is the daily chart of the PSE with a number of moving averages, as well as the MACD, which is the moving average conversion diversion line. Mm-hmm. So based on these technicals and what we're seeing right now, where do you see the PSE moving before the year end and also for 2017?
Okay. So for now, since you would notice that the market is consolidating somewhere between 6.8, 6.7, thereabouts. So that should be a good base, mainly because if you would extend back, somehow the support line would be somewhere about at that level already.
It looks like around 6.7,
yeah, 6.7, 6.8. So that would be your support level. So this one should hold for us to be able to see, an upside later on. Well, somehow it has been consolidating for about 2 weeks now, which is actually a good sign, as opposed to you would notice that the drop has been continuous and it hardly consolidate. Right. So a good consolidation should be a good sign for a bottom to be established. More so it is within a support line.
Now, you also wanted to look at the weekly chart of the PSE. I mean, it's pretty much the same, but it's just on a weekly basis. What does this tell you that's different from, say, the daily chart that you're looking at?
Somehow, we could sense that from the weekly chart that the trend could still be weak, that the moving averages has been breached on the downside, as well as the MACD is on the negative level.
Now, just briefly for our viewers, we're seeing that that whenever the MACD or the conversion diversion line falls below the signal line that's derived from the computation, it's actually a bearish sign, correct?
Yes. So this is what we call the center line, which is basically the demarcation of whether a market being strong or weak. So in fact, during the time that when we see that the MACD is at above the center line, somehow we can see that the market is relatively still on the strength side. However, once it crosses below the center line, that's the start of a weakness.
Right.
So for now, it's weak, but somehow that should be a precedent of a bottom.
I see. So close to the bottom, but there's still some room to actually go down. Yeah, interesting. Yeah, I mean, Reg, I don't know if Marvin concurs with this also. I mean, Marvin, what do you think that there's some room also?
Question on my mind there, Marvin. Consolidation 67, 6,800 level. What's your take on what Ricky just said?
Okay, the MACD readings that he showed was pretty much accurate. That it showed bearishness in the market. So what you can expect right now is until you see that cross upward, we might see the market still expect to go down. So I'll see the base at 6.7. If that holds, we're okay. But we won't fully reverse or turn bullish until we break the resistance at around 7,400 something. So we're still a long way to go. Whatever upward movement that you might see over the next few days might just be rallies, but it doesn't really change the general trend. So you have to understand, even in a market that's going down, there will be rallies that will challenge it. But as of this point, we haven't seen any evidence that it's really reversing upward yet.
All right, and just very quickly, guys, I want to know your thoughts on outflows, foreign fund outflows. We're still seeing lots of money flowing back to the U.S. away from Philippine assets. Is that a concern? Marvin, kick off?
Well, I think the Fed rate hike will further increase that. It's still fixed money for a lot of large funds out there. So will it continue? As long as there's no, I think there's no game-changing news in any of our markets that will bring investors in. Or I think when the market hits some sort of discounting where everyone thinks it's too cheap to ignore already, that's when we'll see more inflows come in. But as of this point, I think there hasn't been enough news to bring investors back in.
Well, no, there's a trifecta that coming in 2017 also for the Fed.
Absolutely. Yep. Ricky, last thoughts on foreign fund outflows?
Well, due to the interest rate hike, that should be the main reason why we see the market is getting weaker, similar to the latter part or early part of 2015. However, if we're going to look at the foreign, the long term, that should bode well for the Philippine market because the reason why in U.S. increased their interest rates because of a good and a performing economy already. So over the long term, we would be able to benefit from that recovery as well.
All right, we're gonna have to leave it there, guys. That was Ricky So, and here with us up on the deck, Marvin Germo. We appreciate your time this morning. That has been your first snapshot of this trading day. I'm Regina Lay.
Follow us on Facebook and Twitter at Bloomberg TV PH. I'm Quinton Pastrana.
And I'm JP Ong. Thanks for watching.